Welcome back. For the first time since XRP exchange-traded funds launched in November, these products just closed a month with more money flowing out than in. March 2026, $31 million in net outflows. That has never happened before. Here is the part that makes no sense. While that money was leaving, Goldman Sachs disclosed a position of $152 million in XRP ETF products. According to Bloomberg intelligence analyst James Seifert, Goldman represents 73% of all tracked institutional XRP ETF holdings among the top 30 investors. One firm, 73%. So here is the question this video is going to answer. What does Goldman Sachs see that the rest of the market is ignoring? Because one of those two groups is wrong, and the data will tell us which one. We are going to look at the on-chain numbers, the ETF picture, the macro forces crushing this market right now, and the exact signals to watch in the weeks ahead. Not the bullish half, the complete picture. So let's break it all down. Goldman does not make a $152 million bet on a hunch. They run compliance reviews that take months. They model risk across dozens of macroeconomic scenarios. They pressure test every position. When Goldman shows up at that size, they have done work most retail investors never see. And Goldman is not alone in the thinking, just in the execution. A Coinbase and Ernst & Young survey of 351 institutions, 96% managing over $1 billion, found 1 in 4 plans to add XRP in 2026, 73% plan to increase overall crypto allocations, 68% said they would buy a single asset altcoin ETF for XRP or Solana if approved. That is on top of the 18% who already hold it. On the regulatory side, March 27th was the SEC's final deadline on 6 spot XRP ETF applications. Grayscale, Franklin Templeton, Bitwise, WisdomTree, 21 Shares, and Canary Capital. Bloomberg Intelligence puts the probability of at least one approval before end of 2026 at 95%. The legal barrier was removed March 17th when the SEC and CFTC jointly classified XRP as a digital commodity, the same legal category as gold and oil. The infrastructure is built, the institutional appetite is documented. The legal pathway is clear, and XRP is sitting at $1.38, down 40% from its peak. So something powerful is working against all of this, and we are going to name it. But first, let me pull up what the blockchain actually recorded this week. These are the numbers the institutions are looking at right now. 78% of circulating XRP is held at a profit. Think about what that means in practical terms. For every 100 XRP holders, 78 of them paid less than today's price. Long-term holder supply is growing. That is accumulation, not exit. The 30-day realized price sits at $1.10, giving the average holder a meaningful buffer at current prices. 30-day realized volatility just hit a multi-month low. Analyst Zaif Crypto, who tracks XRPL metrics daily, flagged this as a compressed spring pattern. Low volatility after a prolonged correction has historically preceded sharp directional moves. The market is pausing. It is not finished. These quiet compressions are the setups, not the signals to exit. This is where most channels cut to the subscribe button. We are going to do the opposite. Now here's where it gets uncomfortable, and the data doesn't lie. XRP ETFs recorded only 4 positive inflow days in all of March. On March 26th, the day before the SEC deadline, arguably the most significant day in XRP's regulatory history, every single major fund posted 0 net flows. Canary Capital, Bitwise, Franklin Templeton, Grayscale, 21 Shares, every one of them flat. Bitwise alone reported $25.9 million in unrealized losses from the price decline. Total March outflows $31 million. ETF flows are the real-time vote of institutional sentiment. When flows go negative, the marginal buyer has stepped back. Critical context, Cumulative inflows since launch are still $1.21 billion. Assets under management sit at $949 million. The long-term money, Goldman's money, has not moved. What left was recent reactive capital. Here is what that means in plain English. The deep-pocketed institutional holders are staying put. The impatient short-term money is leaving. That is a standoff between two very different kinds of investors. Standoffs in markets eventually break, usually in the direction of whichever side has more conviction and more capital. Goldman has $152 million of conviction. The question is not whether Goldman is right. The question is what is going to make the price reflect it and when. Here's the force that every crypto investor is up against right now, and most don't even know it. Right now, you're probably thinking, if all of this is true, why is the price falling? That's exactly the right question. The answer is oil. On March 18th, the Federal Reserve voted 11-1 to hold interest rates at 3.5% to 3.75%. Reason? Inflation is not falling fast enough. Reason for that: the Iran conflict disrupted oil flow through the Strait of Hormuz, a passage carrying roughly 1/5 of the world's seaborne oil supply. Oil is now above $114 per barrel. Expensive oil raises costs across every sector. The Fed cannot cut rates when prices are rising. When borrowing stays expensive, money moves out of risk assets, including crypto. The numbers the Fed just published: 2026 inflation forecast revised up to 2.7%. Only one rate cut projected for the year. JP Morgan cut its S&P 500 annual target to 7,200, 5 consecutive weeks of stock market losses. Fear and greed index at 29, deep in fear territory. $336 million in crypto liquidations in 24 hours. Here is the full picture. XRP in 2026 has regulatory clarity, 6 active ETFs, $1.2 billion in cumulative institutional inflows, a Coinbase survey showing 1 in 4 money managers want in, and Ripple's $1.25 billion hidden road acquisition expanding its institutional payment network. All of this is real, and XRP is still at $1.38. Fundamentals set the destination. Macro sets the timing. Altcoin Sherpa, an analyst with 432,000 followers, stated this week plainly, capital is rotating out of altcoins. Until Bitcoin dominance breaks, assets like XRP will keep bleeding. Bitcoin dominance currently sits near 60%. When that number is high, altcoins lose relative ground. It is a math problem, not a Ripple problem. Before you go all in on this narrative, you need to see what's on the other side of the ledger. Ripple releases up to 1 billion XRP tokens monthly from escrow. What is not used for operations gets relocked, but the unlocked fraction represents hundreds of millions of tokens potentially available to sell. That structural overhang does not disappear. It is a ceiling that rises with every escrow release cycle, and it is baked into the price structure whether markets acknowledge it or not. Let me show you the 3 zones where supply swallows demand. 145. XRP needs a full weekly close above this level in the first week of April. Historical data over 11 years shows April averages 24.8% gains, but the median is approximately 2%. A handful of outlier years drive that average. The base is real. Do not confuse average with median. 155. First meaningful technical resistance. A clean weekly close here signals trend reversal from the current downtrend. 160. The level XRP briefly touched after the March 17th commodity classification, then pulled back from. A sustained weekly close above 160, not a spike, confirms the next leg and triggers a new wave of institutional order flow. For XRP to clear all 3 in April, 3 things must align. The Clarity Act advances at its Senate markup meeting, ETF flows turn consistently positive, not the 200 million per week pace of November, just consistent green days, and macro pressure, specifically oil and the Fed, stops actively crushing risk assets. 2 of the 3 are achievable in the near term. The macro is the wild card, and it is the biggest one. Now let me make this practical because the whole point is knowing what to watch. Signal 1, the 145 weekly close in the first week of April. Full week, not intraday. If it holds, the historically bullish April setup becomes active. Signal 2, weekly ETF flow data from SoSo Value published every Monday. After March's 4 positive day month, even 2 or 3 consecutive days of net inflows represents a trend reversal. Watch Canary Capital's XRPC fund first. It has been the most reactive. Signal 3, Bitcoin dominance below 58%. That level has historically been the rotation inflection point. When it breaks, capital flows fast into altcoins. Think of it as a dam. When it cracks, the flow is fast. Signal 4, the Clarity Act, Senate markup meeting in April. The most underreported catalyst in crypto right now. If the Senate Judiciary Committee advances this bill, the last major regulatory uncertainty for crypto assets in the United States is gone. Goldman's 73% share of tracked institutional holding scales rapidly when more institutions get the regulatory clearance they are waiting for. Bull scenario, ETF flows turned consistently positive in the first 2 weeks of April. Clarity Act advances in committee. Bitcoin dominance pulls back below 58%. XRP tests 160 by mid-April. Analyst Crypto Bull, using the 2017 breakout fractal, projects $4 to $9 for 2026 under that alignment. Bear scenario, oil stays above 110. The Fed signals at its April meeting that no rate cuts are coming this year. Bitcoin dominance continues to climb. XRP retests 134 support before finding a floor. Correct response, patience. You do not need to guess. You just need to watch these signals. So let me bring this all together. XRP just ended March with its first monthly ETF outflow period since these products launched. That is a real data point, and it matters. But at the same moment, Goldman Sachs disclosed the largest institutional XRP ETF position ever recorded. 1/4 of all surveyed institutional investors say they are adding XRP this year. The on-chain data shows accumulation, not distribution. 78% of supply is in profit. Long-term holders are adding. This is not a contradiction. It is a standoff between 2 time horizons. Goldman is playing years. The impatient money was playing weeks. Weeks lost. Years are still in the game. Tomorrow, fresh weekly ETF flow numbers from SoSo Value drop early in the week. We are now in the first days of April, the make-or-break month for the historical setup. I will have the breakdown the moment the data lands. These numbers will tell us whether March's outflow was a 1-month anomaly or the beginning of a new trend. Do not miss it. The setup is in place. The institutional architecture is built. The legal structure is cleared. The macro is the last lock on the door, and it is the one thing neither Goldman nor Ripple can control directly. Now we wait for the trigger. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.